Good morning. Let's get some charts up here. Good morning, Ethel and Logan. All right. Our internals are they're in the oven. They're cooking. They're almost baked. You can see, let's get my little crayons out here. And so they aren't, they don't turn on a dime when they line up to turn on a dime. But we've been saying for a while, sentiment needs to join breath. And we're just about there. And with today's gap down, if the selling should stay relatively consistent, it don't have to have any kind of a nasty move. I mean, there's the news tomorrow, jobs report, I guess it is. That could make things go in either direction. That said, we know we're near the turn point, right? A short-term turn. Turns tend to be a bit treacherous because of the indecision. Things are going down. Ideally, they happen with some kind of a capitulation. Got the S&Ps here, and this is the current bar, and you see it's just kind of so far. I mean, it's about the same size of yesterday's bar. So say the momentum slowed a little bit from that bar, but about the same size. So ideally what I would like to see, we see the things that historically for us would line up perfectly would be a spike under that pivot low. Right? The concept of a greater than 100% retracement. And it comes all the way back down there and it takes out the low. It hits 3,900 and we get some stabilization and a turn. Okay? So this is cooked historically. Look, this is a pretty low number. Getting it down to a minus 300 with sentiment down here, historically always been a buying opportunity. This isn't down. This isn't here yet. Again, today, you got a bunch of stuff gapping down. Gap downs in my list 274 versus gap up 155, 145. And there's some stuff in there that they're not great gaps. And then, all right, no, we'll see. It's the start a little bit more negative. You can see where the futures are at. Dow's down a couple of hundred, and we're going to look at these and just see where they are in relation to support and resistance. Okay? So again, by the end of the day, I'm hoping that this line is down between these bands, and that tells us we're close. Plus, we need to see prices begin to make a turn. And I suspect that should occur, well, maybe at some time today, but then we got the jobs report and everybody's whatever, jobs report. That's what's in the news right now that it's being focused on. Right, more with the inflation. But meanwhile, I don't know if you heard on the news yesterday or wherever, I had, I think, Fox on, and they say Pennsylvania's ready to hand out another $2,000 to people to help with the inflation. Well, I do. Do I expect 3,900 for buyers to be there? I do, because of the greater than 100% retracement concept and it being a whole number. There's no moving averages there. I could change this and see possibly, is there a subjective moving average like a 100? Do I have a 100? Let's click that. It's already, no, 100's pointing down, the 200's pointing down. Everything's down below everything. Everything is looking nasty. But, I'm going to see, McGraw. I mean, we use our so-called crystal ball, right? Which is based on our support and resistance. We look to the left and look at the patterns. market internals, and then do we actually get a green bar? Right? I mean, I would love to see today move lower to 3,900. Now, when you say, do I expect buyers there? Absolutely, there's going to be buyers there. How many? I don't know. No one's sending me text messages, but there's going to be buyers there for sure. It's a whole number. It's going to break this low. I would love to see this bar become a range expansion bar. And that's what it would be if it broke down to 3,900. And then we'll see where it actually closes if that happens. So, we look for things that would set up historically as a good opportunity, and then we see what actually happens. Now, with this bar here, and we know, everybody looking at option open interest and gamma ray guns and all that, 4,000, blah blah blah. Okay, I get it. There's nothing to the left at 4,000. You had a monster igniting bar. So just thinking about that whole number and open interest after this pattern, and I was thinking, nah. And I couldn't help myself the other night because I was checking out the streaming thing for Twitter. I usually don't go on Twitter, and I saw you comment about some other service saying it was a monster number. And I was like, look, you got a wide range bar here. I don't know a monster about it being a monster, that's a monster bar. So my expectation was it was coming down here, and I posted a chart of down this area. So now when we can get a confluence of the gamma guys and what we look at here at Master Trader, now you're getting somewhere. Right? So our method of saying, hey, if it breaks this pivot low, a greater than 100% retracement, it's traveled, a pretty long way to get down here from this high. There's a big open interest there. It's going to be down about 10%. We're at the end of the last month, and we're at the beginning of this month. Historically, just that little period of time tends to be bullish. You never hang your head on one concept, but it's just based on inflows of, say, brainless money. Hey, it's the end of the month, beginning of the month. Send my money into, the manager, the mutual fund, whatever, and they got to put that money to work. So that's one other thing, and whatever else we're talking about here. So, and now look, with all of that being said, we're going to see what happens today and tomorrow, and here are internals and so on. Here it is. So it's not an advanced decline line, Ty. It's called a McClellan oscillator, which is such a simple thing. It's kind of like a MACD indicator. They took the idea of a MACD indicator, which is the difference of two moving averages. Like if you had like this moving average, the 20 and the 50, and you measured the difference between the two, that's what this line would represent over time. Now, the way it's calculated is it's a 19 exponential and a 39 exponential, and this measures the difference. When the 19 is below the 39, it's below zero. If the 19 goes above the 39, it's above zero. And whatever the distance is between them, where I've got these green lines, historically, if you go back over decades, these are the levels which historically are extremes. Now, 285, get to 300 tomorrow, that's about as extreme as it gets. And you know what? And sentiment down here, we know we're within days of a turn. Institutions follow this stuff, okay? They follow other stuff, right? Because whatever. But they're following things like this, and they all act as a herd. And they're all going to jump in, right, as they did at other levels. And you'll see. So everything that Dan and I say in these pre-market things, they're historically there for anybody to go back and look at. And those of you that get our letters, historically, there's a track record. And you see that majority of times, spot on. Been doing this a long time. If it didn't work, I wouldn't use it, right? It's like anything else. Why keep doing the same things that don't work? But anyway, this works. I pointed this out, a few weeks ago. Said, hey, this thing's going to start pulling back. We talked about, hey, this is at support. It's going to stabilize. And then the Powell catastrophe. And, it's just kind of working its way down here slowly to the destination, right? So look, down here, it breaks, it's going to gap down. And so it gets down here. This is support. People look to the left. Maybe it gets a little below it. That's great. Look what's happening on the hourly chart here. It broke out and came right back in again. So a little bit of a breakout failure right there. The 2008, 2009 market internals anticipate tradable rally. 100 for every rally, the internals put us in the ballpark. And every top, they put us in the ballpark. Did you know? You probably don't. Right before the pandemic hit, the news hit everywhere. The yield curve got near inversion. I said, something's going on here. Something's going to happen. Because historically, when that gets like that, something's going to happen in the market. No one was talking about pandemic. So, and no one was expecting what happened at that time. Now, let me share a little something with you about that pandemic low. And as bad as things, would I be willing to own it at 3,900? Yes. Yeah. Not all in. Ty by now, it's nothing about going all in. If you said, let's buy spiders at that level, I said, okay, no problem. And you know what? If it went to 38.50, who cares? Right? But one of the things that you learn over time, and I've been doing this a long time, I still learn stuff, about, now everybody's talking about inflation now. And historically how, government's answer to everything, which we know, is to spend more money and then promise to pay it back in the future. Well, when they did that trillions of dollars to save the day, which fueled the market going higher, that just about guaranteed inflation. And so here you have the government always thinking that they can spend their way out. And it's kind of like the chickens have come home to roost. Like, you got away with this for so many years. That was your answer to everything, whether it was the Lehman thing or any other points in time. And, now they got a problem. And so how are they going to get out of this? Look, we're talking about something short term here, a tradable bounce. And I've already said, look, if we get this turn here, maybe it rallies up into the options expiration on September 16th. And then maybe from there, it's the next wave down. We'll see. All we know is what we know right now. And we make assumptions about the future, about what we see right now. And we see how it plays out and how we can profit from it. Yeah. So look, that options expiration is going to be a big deal. And then we go into October, the so-called crash month, where there hasn't been any crashes in a long time. But hey, maybe this will be a year to remember. We'll see. Right. Let me continue here. McGraw saying CPI. No one's talked about CPI for years and years. Now he's saying CPI on September 13th. Of course, everybody's thinking inflation. Right. So 392 gapping down toward this pivot here, 390. Let's see if it gets below it. And remember, you got all these institutions that are saying it ain't going down there to test, or whoever, the June, July low. Maybe it won't, but the deeper it gets down here, and the smaller the retracement from these reference points, the greater the probability of going down there. Because if this doesn't retrace a significant amount, right? Remember a week ago, I said, hey, if it can't get above here and close below there, assume it's going to keep going lower. It can't even get above a prior day's high. A first reference point of resistance. So now as it comes down here, right, what's to the left, more buyers are going to show up. And that's a big level for open interest, which is going to provide some support. But if it doesn't have a significant rally, that communicates that buyers really aren't all that interested yet. They're still scared to death about what the Fed's going to do. And so coming down to the most significant level is where the majorities are going to feel the most comfortable. And so, did you want me to display the yield curves? Here they are, inverted, been inverted, working its way down. I've explained before, prior recessions, this was already down here before the recession hit. And so there's nothing good going on here. We're just looking for tradable balance. You see the 3-month continues up, the 5-year pushing up here. Now the 10-year. Look where this is. I mentioned in the green room over a week ago, where things were like, oh, maybe they're going to start going down. And I said, here's this money manager on CNBC. In reality, what do I care about what this money manager's opinion is? Because they all tend to do the same thing, what they're looking at. Oh, I'm bullish as long as the 10-year stays below 3%. Oh, yeah? Well, in my opinion, it was going above 3% because of this breakdown failure. And here it is, moving up here, and everything's coming together, right? The only thing we really need to do to really maybe cause a mini crash is for Bitcoin to break below these levels and start plummeting. And it's just hanging here. There's no retracement. Been down here for a few days. Look at this one, wide range bar. Couldn't get into the halfway mark there, going down. And now it's at a major support point and ain't lifting up. So that tells me that all these Bitcoin bulls, why haven't they created a wide range bar blasting up to here? They're not so bullish. I haven't even gotten to SPX numbers. I'm talking too much. Jacob always gives me a good number, but let's see. SPX. The downside should be juicy if we can get something decently below 3,900. No bid and ask. Let me look at TC2000. What's going on here? Oh, they cleared this. All right. Let me look over here. Why are they clearing the quotes? Okay, you guys, I don't know what's going on here that they're clearing the quotes on 2 time frames, 2 platforms. All right, McGraw's helped me out here and Jacob's helped me out here. So 4,005 I think would be fine. 38.65, there's some juice. 38.65. That should be a no-brainer. I would maybe even look at 38.70. Let's make this, just to compress the data here, 180-minute chart, just to compress. So there's that level, 38.70 down here. Well, there's nothing below. So look, this is where it is. It's got to travel down here. It's got to get below 3,900. It's been going down for a while. It capitulates, takes out the stop at the pivot. I know there's nothing to the left there, but look, just wait 5 minutes and see if the market continues down in the first 5-10 minutes. There should be enough juice down there. Even a little juice at 38.50. Well, I start calling that a no-brainer. There's an unfilled gap down there. And yes, I got all my little notes up there from the past. All right. So, yep, that's good. That's good down there, and it should get a little juicier if they continue to fall, and they're not doing anything here prior to the open. So that would be the most logical thing to happen, is poke down below there. So I don't think we're going to see anything different. I looked at interest rates. I looked at Bitcoin. Don't expect anything from gold. I don't think so. It's still got to go down to the low. And so everything's still in bearish mode. Transport's collapsing. It's the end of the world. I know it's not, but it always seems that way near the turn. All right. All yours, Dan.
Good morning. All right, so yeah, we've been milking our shorts here. So all the opens are fine. Any questions, just ask me. And there's a lot of earnings things that are getting walloped here today. So that's why, as a contrarian, both in the stock and in the broader market turn, as Greg's been summarizing, I'm focused more on put spreads here today, not call spreads. Boeing, I've been tightening stops. Boeing, we have a call spread. Twilio, we have a bear. We're long puts in this. Just nasty daily, weekly. Look at that thing. I don't care that it used to be 450 bucks. So we're long puts on that. Long puts on TDOC. Gapping down here. So I've been busy tightening stops on things. Greg mentioned IYT. We have a call spread way out of the money. So let's move stop yesterday's high. We're actually along McKesson, which, well, no, that's not right. COP. Look at that beautiful chart going sideways in a strong uptrend and showing relative strength. Looks like it's going to open, pretty flat in a down market. All right, let's see what I have over here. Earnings and other things. VMC, I see a couple prints up here. The metals have just been killed. The materials have been killed this past week. And look at Alcoa. We actually were short puts in that. That stopped out yesterday. So we'll see if VMC wants to make the turn. This one we found, this was an earnings stock yesterday. I like the bottoming tail, range expansion, 1732. Let me set an alarm. That looks good over the high. This little TME, that was on my core long list. Remember I was trying to buy it this day in the gap fill. And then it kept going. But it looks fine, gapping down here a little bit. So we can take a half lot over yesterday's high. Oracle. Today's Thursday. Tuesday, you got that bottoming tail. That's going to be some support. FMTX has been on a tear and now wow, now it's gapping up to 19. I wonder if that's a buyout. If it is not a buyout, then 30-minute low, that's a call spread candidate. Now, see, in terms of shorts, Thomas, I would prefer a pattern like this. It's under the 20, it's under the 50. You had bearish consolidation failure. I got 3 more bearish bars gapping down. If this can't bounce in 10-15 minutes, short the low. So do you see the difference? I know they're totally different sectors and all that kind of stuff. All right, thanks, Lawrence. So I'll delete it. STM. Here's another one. I like this one better. I know it's on the 50, but look, you had a failed bounce, 180 reversal. You got 3 inside bars, and you got a price void. So there, I gave you two I like better. Roblox and STM. McGraw, you mentioned this thing to me, UEC. It looks fine. It looks fine over yesterday's high or this pivot 465. UEC, I'll set an alarm 465. Yeah, I did. Okta's the only earnings one I did yesterday. I did no, I didn't do Okta. What did I do? I did Vive. Yeah, I have a big list. So Vive is kept down to 175, which is huge to this prior low. I shorted a one lot of the 155s, so I still have $20 of cushion. I'm not in Okta, but I just posted here, we'll go through them all in my gappers. There's a lot of things that are gapping a lot, and we just got to wait and see. We got to wait and see where they're going to turn. But yeah, that is ugly. All right, let me continue here. All right, HIPCO. I don't know what this is, but that could. But what would have been this on? I don't know what you're asking. Well, on any. You know, you've been with us for a while. I just go through and I see if I have a bullish bias, and then I go through and see how far we can get away, or we might even do a condor like we did the other day on something. NTNX. Yeah, that's on my list here somewhere. Yep, that had earnings. I mean, to me, it's gapping too big. The 21's off the chart up here, but it's holding pre-market. SMG. I don't see a gap. We'll come back to you, but it's a nasty downtrend. A little six bottoming pattern, gapping down. The waitress, coup. I can't tell where you're gapping. Costco. I see Costco is a 1, 2, 3. That we had a call spread on this wide range bar, but this is a candidate for another call spread. All right, there's Twilio we talked about. We're already in it. Let's see, here's another one. This is an excessive gap that's already down a lot. So I'm going to put that in a window. SMTC. I'm going to put Twilio in a window that just hit my low alarm. That's 68. So we have a nice open gain in that. JZ, I guess I'll go by the ticker. Recent IPO. This is one $180. Yeah, that's the one I saw the other day in a death trend. We'll keep an eye on it. All right, Boeing, low alarm. I got a ton of alerts going off here, obviously. Sample CA, up alarm. All right, Boeing, we have a call spread. It looks fine. CA, up alarm. Look at that strength. Nice.
The room has that second call spread. I didn't post it to the subscribers in the letter, but that's probably considered that expires Friday. So maybe closing that.
On Boeing?
What?
On what, Boeing?
Yes.
Right, I remember, and I put on one for next week. And I tightened the stuff already. Hilton, low alarm.
All right, it's coming down to the 50 MA.
All right. Wow, SMTC is getting taken to the woodshed. All right. A Twilio low alarm, nice. We have a nice open gain in that. Going 172.